Hello, everyone. Welcome. My name is Matt Anthony. I'm with Evident, and welcome to our webinar, 5 Steps to Improve Third-Party Compliance and Reduce Enterprise Risk. I'd like to introduce our panelists and talk about their areas of focus here at Evident. So Dana Thomas joins us. Dana runs all our operations, onboarding, customer service and support, and so on with all our customers. And then David Wellner, who's responsible for all our business development, partnerships, and so on at Evident. So today we're going to walk through 5 case studies, looking at how our enterprise customers are managing their third-party insurance verification to support their risk management programs. At the end of this webinar, we will provide you with a checklist document that you can actually use to help boost your third-party compliance rates and try to reduce your risk and spend. That's the objective, right? Always. So please, we urge you to add your questions during the presentation to the chat box, and we'll respond to them in the Q&A portion at the end of our presentation. All right, so let's talk about how things are going right now in the world of third-party insurance. Insurance verification is all about making sure a vendor or business partner can cover any losses that they cause and that they don't travel upstream to your enterprise. For instance, I am guessing, if we take a home example, that you probably check to see if the people who come to cut down trees in your yard have insurance. It's the same thing. Similarly, there are usually contractual requirements between companies that business partners will maintain some level of coverage. At minimum, it should be enough to cover losses or damages they might generate in the course of doing business. This process should support your business objectives by reducing your risk without taking focus off of acquiring new partners and vendors, being able to provide the services and supplies and so on that you need to run your business and expand your facilities and put things on the shelves that you need for your customers. Often what we find is that it doesn't really support those business objectives. It slows things down. It's painful, complicated, back and forth process. And for a lot of organizations, really doesn't yield very, very good results. Some businesses we've talked to say it's not just worth the hassle to chase down every one of their partners and verify their insurance. And in fact, when we dug into this and really did some research, we found that only about 25% of third parties are actually active and verified with insurance. A full 1/4 of the requests that go out asking for information simply go unanswered, whether or not it's because it's to the wrong person or it was not understood, went in the spam box, whatever it might be. People aren't getting those requests. And another 25% drop out of the process before they can ever get to completion. So in the end, we're finding only about 1 in 4 of the third parties are actually verified. For the rest of the folks, what we find is that 3 major factors really contribute to why verification just doesn't work for many companies. The first is a problem of capacity. So companies are under-resourced to chase down third-party partners, get a hold of certificates of insurance or COIs, and then analyze them. Many people running this function have other responsibilities. It tends to not be as widely understood. Other more urgent matters sometimes will supersede a partner not having adequate insurance. So, they're all running their business as well, the organizations you work with. There's not a lot of knowledge of insurance. And we're not even talking about, 1 partner or 10. Most of our customers have thousands or tens of thousands of third parties to manage. This leads into the second problem, which is a problem of process. For many organizations, we're still using PDFs, faxes, handwritten emails to chase our partners and try to get a response. And then we're manually reviewing certificates, and then doing more manual follow-up. And throughout this process, which has lots of potential points of failure, a lot of errors get made as well. Errors in interpreting documents, errors in following up, understanding when the right dates are to follow up and check on renewals, that sort of thing. Just getting documentation back from the majority of your third parties is hard enough, let alone reporting on success, identifying the actual biggest risks among all your third parties, and the biggest opportunities you have to take action and run the process. So very messy. And then finally, it's a problem of simplification. Think about something as simple as needing to input a credit card number to complete a transaction, but the credit card's in another room. How often does something like that stop someone from actually completing a transaction? I'll go back, I'll do it later, and so on. But once you stop, the odds of you picking that process up again drop quite a bit. So imagine what it's like to get a request for something that's complicated and involved, like an insurance policy. You don't know if you have the right document. You don't know if it's up to date. You really don't have a lot of confidence in your ability to interpret it and make that decision. So I need to follow up with my broker, so on and so on. And more steps get added and people say, all right, I got to take care of this later. I don't have time right now. We see that the requirements are often buried in contracts. They're wrapped in excessive legal language. They use terminology that's not really well understood. They don't contemplate the policies vary from carrier to carrier. And essentially the request itself isn't even always that clear or doesn't make sense. So these things are all driving why verification is difficult and isn't getting done. So we put together a checklist of things that risk managers can do to improve their third-party compliance rates. And, by improving third-party compliance rates, subsequently reducing risk, spend, time, resources, et cetera. And we're doing that based on 5 case studies that illustrate how we are helping our enterprise customers solve this challenge. So we're going to jump into our case studies. First, we're going to talk about a large supermarket chain that we work with to help them manage a very large and diverse supplier group. And I am going to hand this over to Dana. Dana, please take it on.
Thanks, Matt. So as Matt said, one of the organizations that we work with is a large supermarket chain. They've got stores across the nation. They depend on everything from fresh produce to items that have various electronics and technology, and they've got vendors that cut across transportation, and even someone who comes to fix the lights. So they've got a wide variety of third parties that they're working with, both in supplying products as well as providing services with or for their organization. And so, when you're thinking about this, you can imagine that there's a lot of complexity that can be involved with assuring that these vendors and suppliers are meeting the requirements that you have for them. You need a set of diverse requirements to do that. And so this particular grocer, before they started working with us, they were managing 20 different requirements for their wide variety of thousands of suppliers. But even with those 20 different requirements, they found it very difficult to do a couple things. One, make sure that they were setting up the right requirements. And two, to make sure that they were putting people in the right categories. And they were making a lot of exceptions for people who fell just outside of those requirements. And so one of the key things that they were looking for and what we helped them with is to be able to actually get more granular and more specific in what they need to verify for these different vendors. So we went from 20 different requirement sets to over 50 different requirement sets. And it gave them the ability to verify all of their vendors automatically while allowing precise requirements for each vendor. As you can imagine, the lettuce vendor is not going to be the same as the electrician that they might be using. And so when you think about this, what we're really talking about is that flexibility to create precise insurance requirements. And that's our checklist number one. So instead of treating all of your vendors equally as if they have the same risk, being able to develop category specific requirements, being able to not spend time in administration worrying about those exceptions, worrying about where to place people in the very narrow set that you might be working with today, but being able to kind of set it and forget it, if you will, and know that the platform can run and evaluate each vendor based on the specific requirements that you need for them.
So Dana, what do you see as some of the other benefits that actually fall out of having these more precise sets of requirements?
Yeah, well, I think the key thing, if you think about it, is this is something that's a need to have as far as doing the insurance verification. But you don't want to spend a lot of time, whether you're in this case the supermarket or the vendor, going back and forth to make sure that you've got the right things, trying to ask for exceptions, and doing various pieces like that. So the benefit really here is the vendors won't be asked for things that they're not required to have, that they don't have. They'll be able to meet the specific coverage that is necessary for the action that they're performing, for the service or product that they're providing. And they'll be able to do that very quickly without a lot of hassle.
All right, thanks, Dana. So that's our first customer. Let's talk about our second one in the restaurant space. David, can I turn it over to you?
Yeah, we're going to be giving you folks a heavy dose of food-related examples today, so you'll get nice and hungry by the end of this. One of our favorites is a large pizza chain. They got about 33,000 locations across the U.S. and more outside the U.S. Growing a lot, and they had a compliance solution. And it's funny because you think about chains and you think uniformity, and even though the pizza tastes the same in every single store, the insurance verifications actually vary, and that's because there's a lot of complexity under the hood. Some store types are standalone versus attached versus kiosks in mall or airports. You got in-room dining. Some stores are in flood zones or earthquake zones, unfortunately. And then you have single stores, franchisees with single stores, and franchisees with multiple stores, if not dozens or hundreds of stores. And all of this variation creates an immense amount of effort for them. And they were getting some automation out of their current supplier for insurance verification, but none of the configurable automation, and it wasn't fully automated. And the idea of automation at this level of complexity is what we were able to bring, and a solution that's nimble enough to handle that. Like embrace automation. Like the insurance industry is not one to be known for fast adoption, but yeah, it's all really about connecting to the ecosystem, to the insurance industry itself. You think about the players in the ecosystem. You got the enterprise itself, that would be the pizza chain in this point, all of their franchisees, their brokers, as well as the carriers behind them, and creating a layer of communication and connectedness to that ecosystem is really what allows you to get to a compliant place quickly in an automated way, efficiently.
Any other benefits to automation besides managing that complexity?
I mean, yeah, look, it's important to realize automation is not good enough just for automation's sake. Of course, you get efficiencies, you reduce administrative burden. We have found that it yields accuracy, so that's nice, right? You're not trading off speed with accuracy. Accuracy is incredibly important when it comes to knowing whether or not your parties are in compliance. But it also drives a bunch of other benefits. I mean, you think it's kind of like you kind of alluded to this earlier about, was it a fax? I don't know, no, credit card. But imagine if you had the pizza chain, all their franchisees, their brokers, and the carriers all in one room, they'd figure this thing out. They wouldn't need Evident. But once reality is they're not there, and they're certainly not there at renewal in an ongoing fashion. Once you insert a layer of automation that allows you to communicate and connect to that ecosystem, it unlocks other benefits like, oh, all right, this is not compliant. Here's why, and we can react to that in a manner that that is quick and is not a game of telephone. And that's really what it is. It's become such a confusing game of telephone when you don't have that ecosystem locked together. I think that's what I would say is sort of the benefit of the yield of the automation.
Okay, thanks. All right, now back to Dana talking about waste management.
Yeah, so one customer that we have that is very interesting is a waste management provider. And one of the things that makes them interesting, and we see this with some of our other customers, is that not only do they have requirements that they need to meet, but they have customers, and those customers have requirements that need to be met. And as they have various vendors or suppliers that they bring onto a platform that they have, they need to make sure that those vendors are not only meeting their requirements, but they're also meeting the requirements of their customers. And those might not always be the same. So the problem that they brought to us is that they needed to be able to understand not only when one of their haulers, as they call it, met their kind of baseline requirements, but if they had a customer that had additional requirements and that person was serving that customer, when did they also meet those requirements? So, if you think about this, they had to not only reduce their own risk, but they were needing to make sure that they were reducing the risk of their additional customers. And with our platform, they were able to kind of distinguish those requirements so that they could see when someone met, each of the different customers' requirements as well as their own, and can not only demonstrate, to themselves that everything is good, but if their customer asked for, show me that you are meeting my requirements, and one of these was from one of the largest retailers out there, they were able to easily turn over that information to, to provide for an audit, other things, and keep track. So you can see where they're not only keeping track of kind of one streamline, are they compliant with me, but you can kind of segment this out or even have multiple requirements for one particular vendor and make sure that that vendor is maintaining the expectations for both. So, I think when you're kind of thinking about this, it's taking that risk profile to the next level. So I think in the example I had earlier with that grocery chain, each particular vendor was assigned to one, call it risk profile or one type of set of requirements. In this, you're actually able to layer upon, the initial requirement to say that one vendor might need to meet two different sets of requirements, and you need to understand how they're matching up to those two sets of requirements. And I think that's kind of a really unique but important aspect for anyone who's having to prove to one of their customers that their supply chain, the people that they're working with, the third parties, are meeting some unique requirements that they might have, either that's for regulatory reasons or for just commercial reasons.
So it sounds like you're saying that it's the verification is important, not just for third party risk, but actually fourth party risk and so on down the chain.
Yeah, absolutely. And the really interesting thing about this is, those things change, right? Both the customers or that fourth party might change the requirements over time, or you might continue to add additional fourth parties. And the really nice thing is you're not having to go back to the well, right? You're not having to go back and, ask for proof again. You're basically just layering those profiles and saying, okay, does this vendor now meet this? Does this vendor now meet that? And that really reduces the back and forth with that vendor. And again, it allows you to be really flexible to bring on new customers who have different profiles and say, yes, I can immediately give you, that audit based on, the current vendors that we're using without adding any additional, overhead for doing that.
All right, great. Okay, looks like we got more food with David Wellner. So let me hand that back to him.
Not just food, but more gluten here. We work with one of the largest manufacturers of packaged bakery goods in the U.S. They've got about 40 plus bakeries. They produce a lot of the household brands that we know and love. They wanted to expand their business to online sales, but they also were getting really frustrated. They were with how they were currently verifying insurance. It turns out their distributors it's hard to get that insurance. So most of them buy from a select group of brokers. That actually could create a really nice opportunity because you can work with those brokers to get that information. And they were. But there's a problem with that. Those brokers don't have an insurance verification technology. So there's not a lot of automation. At best, they were sending the enterprise batch spreadsheets with a whole bunch of their distributors by name and their compliance status. It was really limited in the amount of data that they needed, and it was all managed on spreadsheets. Another problem with that is they're really good at verifying the third parties, the distributors that buy from them, but they're not good at verifying the ones that don't buy from them. So you need a whole nother manual process for that. There is no single pane of glass. There is also a concern about the reliability of their data and some of the incentives as well. I mean, it is great to have a broker involved. Brokers can fulfill insurance when there's a gap in coverage. It's important to facilitate that. But relying on your broker to do the verification and also sell insurance can lead to conflicts. So all in all, they needed a single point solution, and they needed granular underlying data. So they actually asked us to work with those brokers that they were working with and put it all in one place and do it programmatically to get the best of both worlds, right? Take the least burden on the actual insureds, on the actual distributors, continue to work with authoritative data, but create a one-stop shop with the full automation that we offer.
All right. Now, finally, we'll get out of the food and go over to telecom world. Dana? Dana, we can't hear you.
Sorry, we work with a very large telecom company. And, when you think about telecom, this is a franchise space as well. You've got people who are longstanding dealers with this particular telecom organization. And so you would think that, as a longstanding dealer with a close relationship, that the communication would be good, that you would have no problem getting those updated COIs, that the insurance requirements would be very clear. But the reason this company came to us was that they had a problem with the responses that they were getting to assure that COIs were, that the policies were compliant with their requirements. So what they were really looking for is a way to make sure that there was clarity in the communication, that there was an understanding of when updated renewals were being provided. And this is particularly of importance to them because they were providing products to these organizations. And as you can imagine, with any theft that did not have insurance coverage, they would be, on the hook as a large telco company. So in this case, different than maybe some other areas, there was actually product that they were providing on consolidation, and it was very important to make sure everyone had the right coverage. So, I think what we came in and worked with them was making sure that there was visibility to where everyone was with their, COI compliance. And we really focused on the communication. So, the checklist item here is really understanding the importance that communication is in this process. And I really can't stress this enough. It's everything from the cadence of the communication, the standardization of the way that the requirements are being communicated, the timing, the ability to respond digitally and in a critical fashion and in a kind of a critical time period. So, as we look at this, it's important to be consistent with your communications and have something that can offer that in a standardized way without having to send out one-off messages ad hoc, which is what was happening in the past with this large telecom.
Yeah, and as we talked about earlier, so our data shows that a full 25% of requests simply don't get answered.
Yeah,
so it seems like this would really help contribute to a better response rate.
Yeah, exactly. As you can imagine, I'm sure we've all received emails or some kind of notice, it could be you've got to make that dentist appointment, right? We see this in our personal lives. But I think what's critical is to understand, you've got to send kind of multiple notices. You've got to look at the right timing for sending that. Again, the right structure for that, and making sure that you've got that right communication plan in place, because you can't necessarily expect that you're going to send out one message and you'll get that response as the data showed, as you mentioned, Matt. It's critical you've got that plan, that cadence, that campaign, if you will, in place, and that it's set up in an effective way with the right timing and information to gather the updated policies, especially as they come to renewal.
All right, that's great. Okay, I'm going to jump in, and we're going to pull a couple of our Q&A questions here. If we don't get to your question, we will follow up with you individually on those. This one, I think probably this is going to be for Dana. So how long does it take to create and set up all those requirements?
Yeah, it's interesting. As I've talked about these customers, I can imagine that, people are thinking that this is a complex thing. But the beauty of the Evident platform is that it is all done, through a UI, and can easily be done within just, a couple of hours, if not shorter than that, as long as you know what you're looking for. Being able to set up the decisioning requirements, as we say, which allows you to determine what you're looking for, whether that be for one common criteria or multiple criteria, and also setting up that communication cadence that I just talked about, being able to kind of pick and choose what is right for your audience, is how frequently they receive messaging, what the content looks like of that messaging, and also making sure at the end of the day, this is all, in your branding and looks like it's coming from you, which is a key important element. So this is a very simple thing to do, and gets you well on your way to beating those stats that we saw earlier in the presentation.
All right, thanks. This next question, I think you teased a few of the answers to this next one, but the question: when you talk about automation, are you just talking about scanning documents? So, David, I could see either one of you answering.
Yeah, no, I mean, yeah, like first of all, the COI unfortunately is not going away. So the reality is, just if you want to be good at verifying insurance, you better be able to be very good at collecting. And well, you said scanning COIs. I'm not sure if everyone scans COIs, but collecting photos, images, PDFs, or every which way, even scans of of COIs, extracting that data programmatically and decisioning on it. But that's table stakes. I mean, it's everything from, of course, the configurable communication and branded layer that is used to collect that in the first place. But then all the modification and optimization of the rules that you might apply to that to get your criteria right in a way that maximizes compliance and that's right to protect your business. And then, of course, the real automation is connecting to the ecosystem, being able to communicate with brokers and carriers, because there will be a time where we reduce our reliance on direct COI collection, and where our technology is ushering us into that future. But we'll be straddling both, right? Or both the old school and the new school of just finding the right way and the optimal way to verify and make sure that cover is in place.
Okay, I'm gonna impose my own question here, but you both use the word decisioning. Can you expand a little bit on what that is? It sounds like there's a lot to that.
Go ahead, Dana.
Yep. Yeah, I can take this one. So we use the term decisioning. Basically, it just means deciding or setting up those requirements that you have. So it honestly is easy as toggling a button. Do I want to check for this? Do I want to check for this? Do I want to check for this? And in some cases, there might be certain ranges you want to look for, a limit on a general liability requirement, and being able to indicate what that limit needs to be. So, it's kind of like setting up a checklist, if you will, which is very appropriate for our webinar, of the things that you believe are important to verify. And then once that is set up, then every COI that comes in, or every policy that comes in is being evaluated against kind of that checklist to see if it meets the requirements or it doesn't. So very easy to set up, very easy to make multiple lists, very easy to modify over time if your needs change without having to go back and ask for additional coverage, and being able to kind of evaluate against changes that might occur in your business, simplifying that both for you and your vendors.
That was a pretty decisive answer. So all I'll add is I'll explain what non-decisioning means, which is like we have a lot of clients that they really just want visibility into what that coverage of their third-party network is. If you think about a third-party network, you got all this risk associated with it. They want to know what kind of shield they have to protect themselves from it. So non-decisioning is actually turning off that thumbs up, thumbs down. Is there compliance or non-compliance? And it's much more of a learning mode of like, how do I collect my third party's insurance information? And you're using the decisioning tool to at least direct what you want to collect and view, not necessarily calling out to your third parties that they don't meet your requirements. It's often an interim stage, or it could be a solution in itself.
All right, fantastic. We're a little bit over 30 minutes here, so we're going to wrap up. Like I said, if you submitted a Q&A question, we didn't get to it, we will follow up with you individually. I want to thank Dana Thomas and David Wellner for your time. And with that, thank you very much for your time. And we will be talking to you soon. Thanks.
Thank you.